The markets are absolute bullshit. That's my biggest takeaway from today. We're going to discuss all of the data, all of the Fed speak, the latest around the debt ceiling. Before we do, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We're not financial advisors. We're a few guys who love following the markets, tracking the macro, getting balls deep into the market, baby. But once again, do your own research. That's all I ask of you before you make any buys or sells. Kevin, I can't even begin to explain how frustrated I am right now with the data we're seeing, with what the Fed governors are saying. It makes not a damn bit of sense. This market is horseshit, and I'm just really frustrated with it.
Yeah, I felt that sentiment for a while, but today is definitely one where, this is a hair pulling moment because we got some terrible freaking data. We got some terrible data. Friday? But the Fed spoke. Some of the Fred Flintstones, pretty much. They're cartoons or jokes, but it's insane how, we were talking about it before the show. One person speaks, two people speak, and then the market absolutely is just like, oh, that sounds bullish. Let's go in. Let's go balls deep into the market. Let's go long. And
all right, so
let's get some context first.
Let's get context. Let's get the data, and then we can explain why we're so frustrated.
Yeah.
So, first piece of data that we'll talk about is the JOLTS report. So that's job openings. The previous JOLTS report showed 9.7 million job openings. That was down from the meeting before, or from the report before that. The expectation today was 9.5 million. That would show that the Fed things are going in the right direction in the labor market, for the Fed's case. Nope, came in at 10.1 million. Absolutely ridiculous. So we're seeing less layoffs. A lot of companies don't want to deal with new hiring. We're seeing, so many jobs available. Like, it's absolutely insane. So there's strike one against what the Fed, Jesus, I'm doing it now too. What the Fed wants. So the JOLTS report, not good. That is not and we look back, we, heard Jerome Powell in his last presser saying that we could see if inflation goes down, but the job market remains strong, maybe that's a case where we don't need to overly tighten. Okay. I get that. It makes sense. Another macro data point we got was from the Chicago Business Barometer. This gives you a score of, 0 to 100, and you can see how strong the economy is. Below 50 indicates contraction in the market, in the economy. The last report was 48.6. So just below that number, showing some contraction. Expectation was that it was going to go down a little bit to 47.3. 40.4 was the number. Absolutely terrible. Lowest in 6 months. Some of the, from the report, they asked a lot of these firms that they survey what the biggest problems they're facing are. Increased cost was number one. So that is not a good point for inflation at all. Labor shortages. Once again, labor force participation, not where it needs to be. People are still not in a position where they have to work. And that's, it is what it is. People are playing the system. We got, decreasing economic sentiment. We got longer delivery and lead times, decreased demand, material shortages. There's so much right now that is not bullish for the markets, but the markets don't really seem to care. They went down to start the day. They're coming back up, and they're coming back up because Fed Governor Philip Jefferson stated today that they're leaning towards not raising the Fed funds rate at the next meeting, but that doesn't mean they're done raising for this cycle. So here's where I'm at. And here, I'm trying to work this out, Kevin. I know I've been ranting. I'm going to rant a little bit longer.
Go ahead.
Ace, welcome. Thank you for being here. We've heard for over a year now that the Fed's actions are going to be dictated, are going to be data dependent. Every time Powell speaks, he has said data dependent. Every single time. So since his last talk, when we had a high probability of no rate hike, and then it slowly began to creep in that we could see 25. And then as recent as 4 hours ago, we saw it at a 71% chance of a 25 basis point hike. So it shifted in a big way. Then one Fed governor states that they could see a pause. Meanwhile, since that last speech, we've seen PCE, the Fed's preferred inflation gauge, come in hot, come in at 4.9%. like going up from the previous time of 4.7. So that's bad. We also saw the previous number get revised up. So once again, not good. Now we see this jobs data showing that there are an absurd number of jobs available, right? Like an absolutely crazy amount. And those pieces alone should be enough to say, okay, the Fed's got to keep raising. Add to that the fact that there has been, as far as we know, no other issues in the banking sector. There have been no other collapses. There have been no other SIVBs, no other First Republics, no other PAC West, no other Western alliances. Everything has stabilized there for the most part, as far as we can tell. So those three things should tell us that, okay, we're going to get another rate hike of at least 25 basis points. But we get one guy saying that we're not going to raise rates this time, and all of a sudden the market is doing backflips and cartwheels and shooting bottle rockets out of his ass. I don't understand it. It's driving me fucking nuts.
Yeah, because it's an absolute fucking shit show. People are just not getting through their fucking dense skulls that this is not a good outlook for the macroeconomic, whether it's the market or just in general the economy. Everything seems fucked, right? There's very little that to seem bullish about. The fact that one Fed president said anything that was remotely bullish, but they're just not going to raise rates this time around, that they're going to pause. That's no guarantee. It's not up to him. They all got to vote on it, right? One person speaking doesn't make up the decision for the Fed. It's just one guy's sentiment. That's what's absolutely idiotic to me. It's just, I don't know. Again, this market is just praying that there's some light at the end of the tunnel. But I'm gonna market manipulation. I couldn't agree more.
And he said that they are leaning towards not raising.
Right.
So that they are leaning towards it, or inclined to keep interest rates steady at its next meeting. That doesn't mean, like, that inclination could absolutely get thrown out the window if we get more data. And if the recent data within the last 2 weeks is any indication, guess what? This unemployment report on Friday is not going to be good.
No.
The CPI print the day before the rate decision is not going to be good. Like, I don't know. And if we keep seeing, and let's say we get this, I don't trade, but I may be inclined to short some stuff, because if we get this debt deal over the next few days and everyone is feeling all hunky, and like, I could absolutely see a bad jobs report, but it's overshadowed by the debt deal, so markets don't respond negatively.
Agreed.
I could see next week where there's very little data coming out next week. Like, if you look at the calendar, I'm looking at it. I have it pulled up right now in front of me. There's not much coming in. We got consumer credit next Wednesday, but there's not a lot of reports. No Fed presidents speak in the week and a half, or like the 10 days before the Fed meeting. So they're all done speaking on Thursday. So we won't hear anything from them. So, like, I could absolutely see a world where the debt ceiling deal gets done, the markets get out over their skis, we're pricing in no rate hike, and then all of a sudden, Tuesday, June 13th, we get a brutal inflation reading, and the markets take a shit because the Fed has to raise again. So I'm probably not going to short anything, because that's not really my area that I feel most confident in. But man, I'm tempted to, because I think that, putting in a short on Monday ahead of the inflation reading feels like it could be a very winning strategy.
I think the fact that I think I saw it on CNN last night, but whether that's true or not, 68% of the market right now is driven by greed, right? That's an insane amount for what all this data that we're continuing to get. And it's just terrible data, man. The Chicago PMI is just absolute dog shit. PCE, that's a spike, like an inflationary spike, and we just kind of forgot about it. We're all focused on this the debt limit, debt ceiling. We know that's going to get resolved, right? The only question we had was whether or not it was going to be in time for them to lose their credit rating. I don't know if that's going to be the case now, because it looks like they're all going to sign this damn thing and it's going to go into effect. But we're just building, shit on top of shit, and it's one huge bubble, and it's going to eventually pop. But it's like, what's going to be the thing that makes it pop? Maybe it is CPI. But again, that would be if we get CPI that spikes. If we get a hot CPI reading, and then we get the PC that's that was already hot. That's two spikes. That's in two different sets of data, right? Two different sets of information, and the Fed can't ignore that. So 25, yeah. I mean, I still think they are going to do 25. I don't care what this one dude says, right? I don't listen to just one person's, comments. He said that they're inclined to keep the rate steady. Should have been their steady. They're going to keep steadily inclining rates. That should have been what he should have said, because likely it's going to be,
Like,
closer to 6 than what it is now.
it would be one thing if PCE at the last reading came in at 4.5 or 4.6, but it didn't.
Exactly.
Right? Like the most recent data we've seen before he spoke today was not good data. And he's still saying that we're going to pause and then maybe raise again in the future. How is it not the other way around? How is it not one of those situations where nope, data came in hot, we got to raise again, maybe we'll pause next time, right? Like it's just not happening. And the market is pricing in that they're going to pause. And I think that is a monumental mistake. I think it is an opportunity to like sell into this greed potentially. Like I don't know, man. I don't know. The people that are running this are allegedly smarter than I am. I don't doubt that they are, but some of the stuff they say is so contradictory to everything else that has happened over the last 15 months that it just blows my mind.
Oh, 100%. I'll be honest, if I was on the Fed, if I was Jerome Powell, inflation would already be down at 2%, maybe even 1%. Because I would have just put in I would have gave him like a 1,300 basis point hike in the first month. I would have ended this shit so fast. I would have, kept it there for 2 months. You would have, reduced it completely. Inflation would have been over with. But instead, they don't watch Money Never Sleeps. They didn't ask my opinion. Therefore, now we're stuck with this bozo saying that they're going to keep rates steady. And guess what?
My
now
God.
We're going to have to go on for stagflation for another 14, 15 years. I'll see you guys in 2047. Yeah. But that's what it seems like, right?
Kevin was running the Fed. It would have been it'd be 13% interest rates right now, and
only 2 months.
Actually, it wouldn't be because 2 months is all you need.
All you need.
With our economic expertise here, that's what's up. Okay, I think I've ranted enough. I could do more, but I think that was a sufficient amount. If you missed the rant, you can go back a little bit. But
it was great.
What do you want to look at on the chart side of things? Anything jumping out at you? We saw the decline in the Dow, the S&P, and the Nasdaq to start the day. They're starting to rally back up. It literally is right in line with when Jefferson talked, and he just moved the market right there. Good for him, I suppose. But what do you want to look at?
We can look at the dollar, because the dollar is the one thing that moved drastically after he spoke, and now it's climbing up a little bit, but we've seen the dollar be extremely strong. And again, I bring this up because we're going into summer, and we saw a lot of people kind of discounting the dollar. It's made a wonderful recovery on the daily. If we can see here, this is what's really insane. So this is the daily. You can see that we're extremely overvalued right now. It's no question. The stochastic RSI seems like we're going to go test that 105 at least. We're going to find some resistance. We're going to try and test it again. I still think we are, but we can see how much it shot up today. At our height, we were at 104.699.
Will you go to the daily real quick on that?
Yeah, we're on the daily. Let me just zoom out.
Or no, sorry, like on the 1 day, not on the daily. On the 1 day.
On the 1 day. Oh
yeah, and then go to because I want to show you exactly when.
Oh, you mean like the 4 hour leaf?
Governor Jefferson started talking. No, not even. Go to the 1 minute chart.
The 1 minute.
You can see the exact moment that he made his comment.
I don't even know where I am.
I'm gonna unshare yours. I'll share my screen real quick.
All right, I'm gonna get out of here.
I'm gonna remove yours. I'm gonna put mine up. I'm gonna put mine up real quick, because you can see right fucking here was the exact moment that he started speaking, and you can just see this move down, just red line straight down in the DXY, a little bounce, and then right back down again. Like it's unbelievable. It's unbelievable that this one guy who has one vote. It's not like he makes up. He's not speaking for the majority.
No.
Of the Fed governor, of the Fed presidents. He's speaking for himself, but that alone dropped the DXY so much. It is absolutely ludicrous.
Yeah, and again, I'm glad the DXY bounced back a little bit, right? We're at 103.24, 104.323. So that's not terrible, but it was a lot higher. It was 104.7. That's an insane, that was a great climb. And it seemed like we were going to go test that resistance, but clearly we got rejected because of this. Hold on one second. Where am I going? We got rejected because of one Fed president opening his mouth and saying a whole lot of nothing, and the market absolutely loved it. They absolutely bought on it, and it's terrible. It's terrible to see it because obviously we're making a pretty good move to the upside. We're going to try and test this resistance, and I wanted to see it because I think we are due for a correction of the dollar. We're going to have to come down at some point. I don't know if that's going to be to the 200 or if, say CPI comes back and this looks like shit. Maybe we do shoot up. Maybe the jobs data on Friday helps the dollar stay up. Point is, this bad data, for the most part, has been the reason why the dollar has remained so strong while risk assets have been strong-ish, mainly because people are buying into it in hopes of everything being okay. But the dollar has not shown signs of weakness. Like, we're extremely overbought. It's barely even moved back down. Has not tested any levels of support yet. So, I mean, that's on the daily, and on the weekly, we're very close too. Right, we're getting close to the overbought territory. We've had 4 weeks of just absolute bullish behavior from the dollar, and that's, I mean, to me, that just shows you that there is strength in this asset right now. A lot of people are discounting it. They think that the dollar is going to go down and the risk assets are going to go up. It seems like it's the other way around. It's just the only thing is the markets are being absolutely irrational, and if the dollar remains strong while everything else is irrational, I think that in time we're going to see the truth come out, and the dollar will remain an extremely bullish asset while everything else finally does take a dump. When it takes a dump, I have no idea, because every time it does, they're buying this shit right back up. It's absolutely insane. But I'm still bullish on the dollar. My conviction has not changed. I think that we are going to test resistance at 105, and whether that's from day to Friday or next week, it's just going to be, it is what it is, right? We're just going to have to wait till we see what drives it up. But I don't think it's going down. I don't think it's losing support and going into a bear market. This is a bull market for the dollar.
Yep. I agree. Even with all the, we see a lot of like the headline sentiment around China and countries in the Middle East and some South American countries, getting away from the dollar, but it's still strong, and I think it's still going to continue to be strong. So, yeah, I'm bullish on that, bearish on just about everything else.
I agree. Everything else just seems like it needs to die, but that's just the bear in me. And I look at let's look at the NASDAQ, just because we've been talking about how stupid this has been lately. Let's look at the daily. We're finally starting to see some red in the daily. This parallel channel here is still pretty strong. We broke above it. Now we're breaking back into it. We're overbought on the daily. We're not fully overbought. We could be a little bit more. But if we look on the weekly, we are absolutely overbought, and we need to come down. We need to test the bottom of this parallel channel. This parallel channel is hanging around 12.6 or so. So that'll be interesting to see if, we get down to that level. And then again, this is still one thing that's really concerning to me. 50, 200, extremely close. But, today down 91 points. That's not really that much, in my opinion, considering how much it's been shooting up for the past, 5 months. But the NASDAQ is just something that needs to come down. And I don't know when this bubble is going to burst, but I'm hoping that a strong dollar fights this from going up any further. Not because I don't want it to go up further, but mainly because there's no reason why, this is going to be sustainable. We're completely overbought on the weekly. The daily, we're nearly overbought. If we look at the monthly, we're going to be overbought there by hopefully tonight. The monthly closes tonight. If we close above this channel, I think it could be a fake out. I don't necessarily believe that this is going to be bullish continuation breaking out of this parallel channel on the monthly. Someone's playing bowling upstairs apparently, but there's not a bowling alley upstairs either. That's the best part. But yeah, here's a monthly. If it breaks below this, if it closes above this, I think a lot of people are going to get bullish, but I think that the real answer is, this is probably going to come out of here and it's going to break down. I do think that breakdown is imminent for this one. Again, we look at these parallel channels. You got one there. You got one here in the S&P on the monthly. See if the Dow has one. The Dow is kind of like this weird wedge right now. It's like, probably see it better on the weekly. Yeah, you could argue that this is a wedge and broke out of it, but we're getting close. It's more likely that we're going to lose this 50 and test this 200, and we are going to break to the upside. 34 has been an absolute chain link fence for that. It cannot get through that.
An interesting talking point lately, or discussion topic, has been around the NASDAQ, the breadth of this rally, right? How it's only been like 7 stocks, and we've talked about them a bunch. Nvidia, Tesla, Netflix, Meta, Microsoft, like so many of the other stocks that comprise the Nasdaq have not been doing particularly well. They're a lot of them are maybe up a couple points, even some are down, but like the question has been, does that mean that they're due for their own rally, or is this over frothy of a few different companies, and that's going to send, once they eventually retrace, which they have to at some point, that's just going to send the entire index down? I lean towards the latter. It doesn't make sense to me that all the other companies that are involved, that are part of the NASDAQ, would go up just because these handful have, right? Like it was if you bought before that rally on a lot of these, that's great. Don't be afraid to take some profits off the table, most likely. But I don't see it being one of those situations, especially when we look at the bigger picture, where all of the other stocks that comprise the NASDAQ are going to go up just because the big ones have. Like, I don't think they're going to be pulling the rest of the index up with them any further than they already have at this point.
Yeah, if consumers aren't spending, and I don't care if you're in the NASDAQ or not, you're being pulled up by all these other companies. You're not spending, you're not making money. People aren't going to believe in you, right? Clearly, some of these companies have not been performing as well. Consumers definitely don't have a lot of money on hand, and I definitely know they have a lot of debt on hand, considering they're at $1 trillion. Congrats, got the same market cap as Nvidia did the other day. $1 trillion worth of credit card debt. It's amazing. We've done it. Shut up, ice machine. But yeah, it's insane to think that's just because they're been down for so long that they're due for a rally. It's like, no, I think this consolidation period, maybe the fact that it didn't go up while everything else was going up just shows you that there isn't a lot of strength here. These main ones that have been holding up the NASDAQ absolutely do need to take a tumble down. Like I don't know what it's going to be. Maybe it's unemployment. The fact that people are, going out of, not going to have as much money, disposable income. Maybe that's what brings down a lot of these. But for the most part, or even just like, people aren't spending money. It's just,
that might be what brings them down a little bit. But I'll go back to what you've been saying for a while as well. Whatever is going to really bring it down is something that we aren't even accounting for right now.
That's true. Yeah.
Like we might see a small pullback as a result of some data in the coming weeks, but it's probably more likely that there's something that is brewing underneath the surface. Maybe it's banking contagion. Maybe we are going to have to wait a while and see commercial real estate. Maybe we're going to have to see the housing market. I don't know. But this is why you can't plan for what you don't know, but you can plan, thinking that something bad is going to happen because every indicator out there is pointing to it.
Oh,
right. So it's just not getting overly excited, not trying to put the cart before the horse. Like you can wish a bear market or a bull market into fruition all you want, but it's not going to happen until it's ready to happen. And so until it's that point, buy the dips, dollar cost average in if you want, but give it time. Just remain patient, please.
Yeah. And I just want to pull up Bitcoin dominance again right now, because we saw Bitcoin took a pretty good dump last night. It's down about $700 at the time of speaking. We saw that Bitcoin dominance finally hit the 50 moving average on the daily. See the stochastic RSI is coming down. Question is, does it hold this, right? Obviously, I don't believe that alts are going to start shooting up, right? And Bitcoin is going to absolutely the dominance is going to start coming down because people are bullish on alts. No, I think everything is pretty much going to go down from here. The fact that you didn't have an alt run when you thought there was going to be an alt run is pretty evident of that. Bitcoin dominance is too strong. But now we're seeing that it's going to be testing this 50 moving average. And maybe we lose that, right? And if we do lose that, we might have to find some support down here. It's still pretty high, but I think that a lot of people are, for the most part, putting their money, if they're not in Bitcoin, they're not putting it into alts. Most likely it's going to be in the stable coins. And that might be something that we have to keep an eye on. I'm going to pull up USDT, their dominance real quick. See that it's at 7.58% of the total market cap. It's been slowly climbing. And recently we see that it's ticked up, right, on the daily. So this has been shooting up as Bitcoin dominance has been coming down. What does that tell me? It tells me a lot of people aren't really sure where the market's going to go. And they want to make sure that they have, they preserve their wealth. So that's something to keep an eye on. So if Bitcoin dominance is going down, the price of Bitcoin is going down, but the alts aren't going up, the dominance has to be going somewhere, money has to be going somewhere, and to me it's USDT. And I think that with USDT, there's still a lot of room to the upside. If we're going to look at this like we're trading it, it's oversold, undervalued on the daily. If you look at the weekly, I believe it's a little bit higher. Yeah, weekly is in the overbought territory. But for the most part, I do think that since there is still money in the space, it's going to be found here. It's not going to be found as much in Bitcoin. We might be seeing some of those transfers over. So if Bitcoin dominance can hold, that 50-day moving average on the daily, then obviously it's going to try and push up again. But for the most part, if it loses it, then you might see USDT start to climb. And that just kind of tells you what the move is likely to be. People are just sitting in cash. And that might also drive up the DXY, right? Selling out for USD. So it'll be really interesting to see how this plays out. But for the most part, I think that we're going to see a short-term pump maybe in USDT market cap. Doesn't mean that USDT is going to $1.50 or $1.75. It just means that the market cap is going to grow. And then Bitcoin obviously might be taking a leg down. And we can kind of see through my crazy chart that every time we get a little, pump, we get the red dump. And I want to see this. This is on the weekly. I would like to see this close below this green candle. So that'd be sub 26,723, not too far away. That's about $400 away. All you need is one bad day. But this is on the weekly. If we look at the monthly, I think the monthly we're already kind of screwed, right? Yeah, the monthly's fucked. Look at that. So we came above here. We got a bearish engulfing candle. It's not bullish in any way. So if you're feeling bullish, be my guest. You can feel bullish. Identify however you want in terms of your market sentiment. But for the most part, I'm seeing a bearish engulfing candle. That's a move to the downside. I'm not gonna fight that. Maybe it goes up a little bit, but I don't think it's gonna be, we're gonna see above 31K again. Unless, for some reason Paxos starts printing BUSD and CZ starts buying, Bitcoin nonstop in the exchange. That's the only way I can see, prices shooting up. I don't think even with all this bullish news on the debt limit that we're going to be seeing any positive price action for a lot of these assets. I think we're going to see dominance come down from Bitcoin if we lose that 50 moving average, and we're going to see, stable coins start to rip a little bit. So keep an eye on that. The dollar, I still think is extremely strong. Everything plays into it. It's all connected, and it's all fucked if you look at it the same way. And right now, I have not changed my conviction. I think that we're going down. What is the catalyst for that? That remains to be seen. And it's coming. That's all I can say. That's all I got pretty much on the charts. Nothing too crazy. It's pretty much the same ramblings as always. But for the most part, it's always good to look at the macro and look at the monthly closes. Obviously, this monthly close, I don't think it's going to go up any higher than it currently is right now. We've got a good dump into it last night. And that's probably going to be showing you that the move is to the downside and not to the upside. So just keep that in mind. We are below what we did, and that's a bearish engulfing candle, and those are not bullish, hence the name bearish engulfing.
Wow. You're not the best in the business for nothing, Kevin. All right. I think that is a good place to wrap it up today. Thank you, everybody, for watching. If you have not yet, those buttons down below. I know I say it every day, but I'm going to keep saying it. And we appreciate those who are interacting with us and watching our show. But hit that like, subscribe to our channel if you have not. Drop a comment if you like what we have to say. If you want to hear us talk about anything in particular. If you don't like what we have to say, well, you can probably keep those to yourselves. But also that share button down there means a lot. So appreciate everyone watching. We'll be back tomorrow, same time, same place. Kevin, I hope you're doing okay over there. Have a great day, everybody, and we'll see you next time.
Take care, everyone. This is my paper airplane.